Hey guys, welcome to another Trade Genius podcast. I got my good friend Bob Kudla here, and we are going to talk about why in the world the Fed would be cutting rates once again, as they announced tomorrow, when inflation is on the rise. We think we know why. We're going to talk about that in this video. Let's dive in.
Trade Genius.
So Bob, yesterday inflation numbers came out, PPI, and there was some revisions to the numbers, and we've now are basically looking at PPI inflation back up to levels that we haven't seen since 2023, February 2023. So obviously the Fed's worried about something, because if inflation was the only concern, I doubt we would be seeing another quarter point cut, which is what the market is now pricing in and expecting to see it, and most likely we will see it, because I don't think the Fed's into surprising the markets at this point. So what's the problem?
Yeah, it all depends if you're looking in the rearview mirror or you're looking out the windshield. And for once, I think the Fed might be peeking out the front of the vehicle. Although we have inflation's a kind of a weird number because it lags because of the way they do their calculations. But if you look at the price of energy, it's been basically flat. And you look at the price of rent, it's basically flat, but yet we're still showing 3.5% inflation rate. I think that's probably a statistical anomaly, and I think they're worried about slipping into deflation. And the real reason why they're worried about slipping into deflation is something you and I have talked about ad infinitum, is the unemployment rate, but more importantly, the preconditions are weakening. You're looking at job openings, you're looking at jobless claims, you're looking at new business openings, you're looking at the revisions in the employment report around about what they call, birth and death of companies, and all that stuff's pointing to the big R. And there's actually now, you and I think, aren't the only ones now screaming out into the wilderness that we may already be technically in a recession already. And I think people are starting to grasp it. And I think, you made a comment to one of our subscribers in the room that was saying, hey, economic conditions look really great. But as we both know, is that's a light switch. Just because people are out spending today, they literally could be spooked into not spending tomorrow. And I think we're at that point. I think you have a couple of charts you want to show, Phil. So I'm going to throw it back to you. But that's my guess on this. I think the worry beads are going to be coming out. They're going to get out their deflation rosary, sometime in the middle of this year coming. And then I think you're going to see that big old QE bazooka come out towards the end of 2025.
Well, timing wise, I would agree with that. On the surface, you would say, why in the world, right, are we getting another quarter point cut when you've got what are basically very loose financial conditions? You have markets at all-time highs, Bitcoin's pumping, a lot of the altcoins are up hundreds of percent from a few months ago. You got stuff like Fartcoin making headlines because the market cap's at like 800 million or something like that.
And that just stinks, Phil.
It just stinks. So you have all these conditions that are, stuff you would associate with speculative bubbles, and yet we're cutting rates. So what's their mandate? Well, their mandate is price stability. Well, you could say the stock market definitely has price stability. We're at all-time highs. And also job stability, right? Employment. That's one of their main mandates. So to me, they can't really say, hey, guys, get ready, we're going into recession, because that would just freak out all the algos, right? They have to be the rock of stability. So they have to be very measured in what they say. But if you really always have to read between the lines with the Fed. So basically, I think what the problem is here, and we'll flip through a couple of these charts real quick, is the job situation. Job openings is cratering, and job openings is usually hand in hand with the stock market. So we have a massive dislocation here. Now, granted, we've talked about we're in a wave 5 of a wave 5, right? It's a blow off type of move. So you do get dislocations in these environments. Rational markets can stay irrational longer than you can be solvent if you're betting against that. So you don't really want to bet where you think the market should be in terms of these fundamentals just yet. But I believe the catch down is coming, and I think the Fed cutting rates is telling you that that's what they expect. The other thing you can look at here is the civilian unemployment rate, right? This is the main unemployment rate, just straight unemployment, and we have a rounded bottom. So if you look at what happens right with these rounded bottoms, going back into the chart, here rounded bottom, the green shading is a recession. Rounded bottom recession, right? Rounded bottom recession, rounded bottom recession. You got double recession on that one, rounded bottom recession, right? Every time we get a rounded bottom, you get a recession. This was COVID. That was a fast blip, but here we are again, right? Almost a double bottom now here, basically on the longer term chart. So, I mean, odds are pretty high just based on what unemployment's doing is that we are going to see a recession. We will see this green band form, which is based on the recession indicator from the Fed's numbers. And I think it's going to be, backwards. It'll be a revised number that triggers it. And we'll probably get that somewhere in Q1 where they'll say, okay, Q4, the recession started. So you'll have a recession that's basically confirmed post haste. Then what else we can look at is initial claims. Now, initial claims and the yield curve are really the only two things that I have not seen cross the threshold, right? Now, once initial claims crosses that threshold, I think the market will be topped out, or at least will start topping out at that point, because then the market now has to price in forward earnings that are basically not realistic anymore in terms of what they've been pricing in. So now we got to start looking at dropping forward earnings because, you're just not going to have earnings if we've got unemployment skyrocketing. So I think unemployment rate starts to go vertical, and I think so does this initial claims, and then we'll get through this recession level. But I don't expect this probably to hit until sometime in January, this level, but I do expect it to start shooting up because this is the part where initial claims starts to get vertical, right? Like it has in the past here. Then we get our recession. So I think that's what the Fed is expecting as well. I think that these job number charts are very blatant in what's coming. And I think the Fed's actions are confirming it, Bob.
Yeah, I mean, look, we're going to go into the confession season here in January. Once all the retailers get done with their Christmas evaluation, you're going to be employment revisions there. Companies that are going to try to, reconfigure their balance sheets are going to be laying people off in January too. And the Fed knows that. They're in contact with these CEOs. They're not stupid. They may pretend to be stupid, but they're not stupid. And to your point also is that the market does not go up when the Fed's cutting rates. It simply does not occur. All the data tells you that. So you can avoid it for a period of time, but market goes down with the rates and market goes up with the rates. It seems ass backwards, but that's kind of how it works. And we've been avoiding that. And now we're pretty much at the point where, look, we had the Dow down 9 days in a row. We have value stocks down unprecedented levels, down levels for 50 years, 60 years since we've seen these kind of price actions. You have a bellwether like NVIDIA that's been selling, right? And so, you had energy suffering. And then you also had, the worry with healthcare related stocks and pharmaceuticals and biotech worried about what a new administration means to their profitability. So there's a lot of things that are going to come at us, and they're going to come at us fast, Phil. And I think it's just important for people to understand where they are. It doesn't hurt to have TLT in your portfolio. It doesn't hurt that you're trimming, your long tech, especially if you're making money. What's really telling for me is that they're selling the Dow this year, Phil. This year. Why don't wait till January? So you'll get the tax hit. All these people with mutual funds that are in these Dow stocks are all going to get these, transactional events now, and they're going to be pissed. They're going to find out they have their portfolio and their mutual funds are down. At the same time, they're going to get a tax hit on top of it. That's why never be in a mutual fund unless you can absolutely avoid it, because of the way they do the taxation and your valuations are just a mess. So I'm still convinced nothing's changed my mind. I'm a little less bearish on the Bitcoin action since it broke 104, Phil.
Right.
And I think now we could say 121 is probably safer. We're back to the 3-week window in my view. But I think, after the Fed meeting Wednesday, we probably have our Santa rally, probably take us into the first week in January. And then after that, we have to just kind of reconcile us to the fact that a first year of a presidency of somebody making historic changes is not going to be bullish for the stock market. And I think people need to plan accordingly.
Yeah, I totally agree. Well, do you guys agree? Let us know your thoughts in the comments below. And as always, if you need help navigating these markets, going to be really interesting going into the new year. A lot of changes, and you got to be ready for it. So if you need help, head over to tradegenius.co, check out our specials and our packages. We have educational material as well as you can get into the room with us as we navigate these markets day to day. Thanks, guys. Thanks for watching. Thanks, Bob. We'll see you guys on the next episode. Take care.
Trade Genius.